Good morning, everyone. Welcome to our live daily market outlook for Wednesday, 17th of October 2012, prepared by Windsor Brokers. The highlights of the day, as we can see on our charts, that positive sentiment continues to drive the single currency higher. That hits fresh 1 month highs against the US dollar, with the main driver being yesterday's announcement of Moody's that affirmed Spain's investment grade rating and offsetting the widespread fears of possible downgrade to junk status for the Eurozone country. This, of course, gives some more boost to the single currency as investors now jump into the euro again, and they break above some important levels now. Is looking for a test of September's double top at 130.170. Yes, the single currency broke above 130.70. This was the latest peak of 5th of October, and 131 as round figure resistance, keeping positive sentiment and looking for a further extension higher, as the sentiment and the technicals for now remain positive and supportive for the further extension higher. Similar with the sterling, that continues to trend higher after breaking above important 161 psychological barrier and previous high. 161.40 seen so far. This is marking approximately slightly above 61.8% retracement of the latest down leg, with the trend line at 161.75, main bear trend line seen as the next upside target. Dollar is making pause against Japanese yen on its recent rally, as gains been capped, at just on approach to 79 level, with the corrective action dipping to 78.61. A slight break below the 78.70 support still sees bulls in play, as this morning's price action is pushing the pair's price again higher. Negative near-term tone on the hourly studies is now turning, the indicators are turning higher, with the positive tone on the larger time frames, seeing more potential towards the upside. Greenback, as part of a broader weakness, has dipped lower against the dollars, against the Swiss franc. A 92 zone has so far been tested, the 92.14 low so far, after breaking important low at 92.37, basically correcting, erasing whole gains from 92.37, corrective action up to 94.30-36 levels, and now confirmation of the double top pattern, which is generally bearish, sees quite a good potential for further extension lower, as break of initial 92 support would see further extension, possible full retracement of 90.41 to 99.70, as relief was provided by yesterday's Moody's decision, and Spain's Spain keeping the rating. The commodities are now boosted again. Crude oil again jumped higher, 92.56 seen so far. We are looking for basically for break above the congestion above 93 in order to improve, but overall near-term tone remains positive. Similar situation with the gold, that it extends its near-term corrective action of yesterday's, 2 days ago low at 17.28, regaining initial barrier at 17.50. Of course, we still need to see more extension, the stronger extension higher, in order to confirm the recovery. I would say 17.55 is the next target, but generally near-term positive tone has been established of 17.28, bringing some life into the yellow metals recent negative tone, as the price failed to regain 1800 psychological barrier. From Greece, the Troika is still in talks with Greece regarding the next tranche of the aid, and some labor reforms are still under question mark, and they need to be cleared. That will be basically important things that happened. Let's also take a look at today's calendar. We are starting at 8:30 GMT with the UK's data. The Bank of England's MPC's meeting minutes are due at this time, and the most likely scenario would be the same voting of the previous central bank's meeting. The next from UK is the unemployment rate that is forecasted to stay unchanged at 8.1%, and the claimant count change is showing quite a good improvement. Minus 2.2% is the forecast for today, compared to minus 2.2 thousand compared to minus 15,000 of the August release, and the average earning index for October 1.6 versus 1.5, slightly above the previous release. At 9 o'clock, Switzerland zoo economic expectations. We have no forecast for today. Minus 34.9 is the previous release of the month of September, and some data that are due from United States starting at 12:30 GMT. Housing starts for September is expected slightly to improve. 0.78,780,000 new units have started according to the forecast in September, compared to 750,000 in month of August. Building permits also forecast shows slight improvement. 810,000 new permits compared to 800,000 in month of August. And of course the last one, the US weekly crude oil inventory is due at 14:30 GMT. Another build of US crude stocks is forecasted for today. 1.5 million is consensus, 1.5 million barrels is consensus, compared to 1.7 million barrels of the previous week release. And the technicals, we're going to take a look now and see what we have action in past 24 hours, and what we can expect during the day. As said, the euro remains steady on its latest upleg from 129.00 higher low, and a broader strength of the higher base at 128.25 as a break below the the trend line resistance. First, we have seen the break above 130.00 psychological barrier. At 130.23 is the trend line resistance, and then more significant is the 130.70. This is the 5th of October peak, as well as 131 psychological barrier. Currently the prices are just above 131, with the recent peak seen on opening of Asian session at 131.22, keeping the near-term focus towards the upside, and our main target 131.70. This is the double top of 14th and the 17th of September 2012, with the positive structure seen on the lower time frames being supportive. However, we should also consider that overextended conditions on the hourly chart, with RSI already in the overbought territory and MACD quite extended, might be signal for some corrective consolidative action that might precede the fresh strength and test of 131.70. However, the stochastic is now pointing higher and sees more focus towards the upside, but in any case, we should consider this as a possibility in an interruption in the current uptrend seen on overextended conditions. But overall, bulls remain firmly in play, and set 131.70 is seen as our next target. Also, the ADX shows the clear uptrend on the 4 and the 1 hour chart, although the 1 hour one is slightly extended. This is another probably signal for some corrective action that basically it already occurred during the Asian session. It's better seen. Some consolidative action was seen after peaking at 131.22. A shallow correction that found good support at 130.85, where the 10 days exponential moving average contained the dips. And now at the beginning of European session, the bulls are back in play with the break above 131.00, looking for extension and test of 131.70. As said, positive fundamentals. Yesterday's release from Moody's about keeping the Spanish rating gives additional boost to the single currency and attracts investors for more risk-on trading. And a similar situation with the sterling, strong trend still seen on the lower time frames as the pair advances of 159.74, the recent low of 10th of October, retracing exactly 50% of the larger down move from 163.08 to 159.75 at 161.40 after breaking above important 161 zone. This is the peak of 12th of October 2012, last Friday, 60.96, and then the bullish action was interrupted by dip down to 160.20. However, we mentioned in our previous sessions that 160 is acting as a good support, and any dips above, any reversal of dips above this level will still keep bulls, which actually happened 160.20 contained, and then fresh strength through 161. Has now reached 161.40, the 50% retracement, with the upside target seen at 161.74. Currently, this is the main bear trend line of 163.08 through 162.71. At this point, still a tentative trend line, and then we have 61.8% retracement at 161.80. I would say more significant barrier lies at 162, 162.16. This is the high of 5th of October. Also 162 acts as a psychological barrier, and they basically break above the cluster of barriers between 161.80 and 162.16 is to confirm and give more credibility to the near-term bulls, as regain of 162.16 would shift focus higher and look for a test of the upper barriers at 162.70 and 163, very strong resistance zone. So far, positive tone on the 4-hour chart, and I would say at this point slightly sideways, though positive, still in the positive territory. Structure in the hourly chart sees more potential towards the upside. Of course, any corrective consolidative action cannot be ruled out, as hourly studies are quite extended, but still pointing, are still in the positive territory, although moving, as we can see, the RSI and MACD are moving sideways at this point. We might see some hesitation on approach to the important barriers at 161.80, 162 and 162.16. From the downside, 161 now acts as initial support. This is psychological round figure support, also previous high, and it's reinforced by 55 ascending 55 days exponential moving average ahead of minor supports at 160.70, 160.60. I would say break below 160.20 would be quite risky. This is the higher platform of 10th and the 15th of October 2012, and this would bring some more downside risk into the near-term structure, with the Fibonacci levels, in case we don't see extension higher, approximately as said 160.77, 160.60. There are also Fibonacci supports equivalent to the static levels, and of course break below 160.20 would then focus lower. So far, positive tone that dominates keeps the bulls in play, and looks for test of important barriers 161.75, 161.80, and then 162 and the 162.16. Just a quick look on the Ichimoku studies. Confirmation of the recent bulls is being given by break above cloud top, that approximately at, if it shows us now, around 161.20, let's say, with the Tenkan-sen line now approaching the cloud top. Break above this is to confirm the bullish stance on the Ichimoku studies on the 4-hour chart. And a quick look at dollar yen, that near-term structure basically lost some traction after failing to break 79.00. Of course, the pullback was expected as quite extended the structure studies on the hourly chart. Also, the negative tone has been reinforced by MACD bearish divergence. We can see it on our hourly chart, where the MACD didn't follow the market movements and triggered the reversal down to 78.61 so far. Initial break of initial support 78.76 and another static one at 78.62 has seen dips. Basically, it has been contained by this level. This is also equivalent close to previous peak at 78.60 and also close to 38.2% retracement, with fresh bounce higher and now bringing hopes of further extension and possible test and break above 79.00 in play. Of course, we need to see the break above 79 in order to confirm, and today's close above this level would be quite bullish for test of our very important barriers. 79.21 is the previous peak of 19th of September 2012, and 200 days moving average at 79.37. As daily studies are also now moving above their midlines, more focus is seen towards the upside on the larger picture, with the 4-hour ones still in slight descent and still pointing lower at this point. As said, a regain of 79.00 will offset the negative impact and turn focus again towards 79.21 and 79.37. Failure to break 79 would signal further consolidation, while loss of 78.60 as initial support would delay immediate bulls in favor of deeper reversal. From the levels to watch, 78.60 is seen as a break point at this stage, and the break of this level, as said, will sideline bulls and allow for deeper reversal towards 78.45, which is 50%, and 78.33, 61.8% close also to 78.25 higher platform. That will definitely turn bulls, bring bulls on a side, and actually introduce bears back to the play. And dollar Swiss said lost ground following break below 92.73 and the more important 92.37. We cannot see it on 4-hour, we can see it on the daily chart. 92.37 is the low of 14th of September 2012. Basically, this is the end of the near-term corrective phase of 0.9237, as the upside stayed capped slightly above 94 barrier, with the 200 days moving average limiting gains. We had two spikes at 94.36 and 94.30 that are now confirmed as a double top pattern that is of course bearish and looking for extension lower, with the 92.00 seen as the next target round figure and psychological support, with the negative structure seen on the daily chart, looking for the larger looking for the extension of the larger downtrend from 99.70 and possible full retracement of 90.41 to 99.70 ascent. For now, 92.37 and 92.73 are acting as initial resistances, along with the 93.00 round figure resistance that is basically expected to cap any corrective action. Above this also we have approximately at 93.50 is the main bear trend line drawn of 99.70, and in this case only break above the trend line would provide the near-term relief and prevent bear from further sliding. However, a break above 94 and 94.30-36 barriers is required to signal bulls back in play. Otherwise, near-term focus remains firmly towards the downside, and a break of 92.00 would risk full retracement of 90.42 to 99.70 ascent. And November crude oil, that just to remind you, expires in 2 days is back to strength following a spike lower on Monday that hit the level at 89.78 and a quick recovery that completely erased the losses with further ticking higher, regaining levels above 92.56 high seen so far, with the positive structure seen on hourly chart, keeping focus on the upside. Also, the 4-hour studies are now in the positive territory, and looking for the recent for test of a recent congestion top above 93 zone. We have 93.30, 93.60 levels that will open way towards more significant 93.18, 94.20 levels. These are the peaks of 21st of September. 94 as round figure resistance, and the 94.20 is the 50% retracement of the down move from 100.72 to 87.69. Also better seen on the daily chart, the latest spike lower to 89.78. I think we can see it even on the 4-hour chart. Basically confirms the head and shoulders, inverted head and shoulders pattern with break above, I would say 93.50-60 level that acts now as a neckline, is required to confirm the completion of the pattern and the open way for a stronger reversal, as this is a generally bearish pattern, and it might open way for a further extension higher. From the fundamentals, standard problems in Middle East and the recent sanctions from European Union towards Iran are supportive factors for the crude oil price, and as we have positive technicals, also more focus at this point is seen towards the upside. And finally, gold, I can see some small delay in transmission as I change the charts. It takes some time to show it on your screens. Anyway, the correction of 1728 last Monday's low of yellow metal reached 1750 so far, following the recent strong descent of 1795 fresh yearly high that dipped as low as 1728, and the turn basically the structure, the near-term focus towards the downside as gold price broke below the 3 weeks congestion and consolidative range between 1736 and 1795, failing to regain psychological 1800 barrier, turning focus towards the downside. 1728 seen so far with the current corrective action underway, regaining 1750 ahead of narrower range bottom, previous range bottom at 1755. That also marks 38.2% retracement of the latest down leg from 1795 to 1728. Still, the studies, the indicators of 4-hour chart are still in the negative territory. RSI broke higher and holds above the 7 days moving average, with the 20 days moving average, exponential moving average now being below the price. Yet this is not enough to confirm recovery, as we need to see the break of minimum 1755-56 levels to signal some stronger recovery, and then we have 50% retracement at 1762. At this point, I would highlight the barriers at 1770 zone. This is 61.8% retracement, and the previous peaks 1774.80 and 1773.30. A regain of these levels would bring some more positive tone and prevent the price from further sliding. Otherwise, a likely scenario would be fresh lower top and extension down towards our initial target at 1717. This is 38.2% retracement of the up leg from 1590 to 1795, as well as a low of 13th of September 2012, a break of which is set to open psychological and round figure support at 1700, reinforced by 55 days moving average as shown on the daily chart. That was all from me for today. Now, if you have any questions, please, I would like you to submit them, and I'll be glad to answer. Okay, we have a question about silver. Just give me a second to find the chart. Basically, we have quite a similar situation in silver like in gold with the recent extension lower, retracing nearly 38.2% of the upleg from 27.50 to 35.36, dipping to 32.53. This is equivalent to a previous low of 12th of September 2012, and just ahead of 38.2% retracement at 32.36. Daily structure remains negative as loss of momentum and the break below the consolidative range floor at 33.30 now seems, more focus towards the downside. From on the lower time frames, still a negative structure, but indicators started to point higher on the break of 932.53, with the 33 zone still holding the gains as 33.12 since so far no clear break yet, with the 20 days exponential moving average is still capping the downside as it's still pointing lower, seeing not much corrective potential at this point from the Fibonacci levels of the latest downleg from 34.27 to 32.53. This is also close to 23.6, so initial Fibonacci level. At this point, if we don't see regain of minimum 33.60, that is quite a strong barrier. It's 38.2% retracement, previous lows of 8 and the 9th of October, as well as 55 days exponential moving average. I would say a more likely scenario would be lower top somewhere under this zone, and the fresh extension lower, as said, still negative tone dominates on the 4-hour chart, while some positive signals seen on the hourly, as it acts the fastest away as a bounce from 32.53, turn the indicators up in the positive territory, but as current price action being capped at 33 so far, more sideways movements seen as moving averages are moving, and moving sideways, as well as RSI, and showing so far not much potential towards the upside. As said, if we don't see a regain of minimum 33.60, then a further extension lower would be quite likely scenario at this point, as break of 32.36 will open 32 as a round figure support, and then 31.80 is the 55 days moving average ahead of 31.43, the 50% retracement. Any further question, please? Just to remind you, all of you, I saw some attendees coming later. If you missed any part of the session, you can find shortly. It will be uploaded in the YouTube in our page called the Windsor Brokers Forex. So, you know, if you come later or you miss the session, you can always find it recorded and view it from YouTube, from our YouTube channel. It seems we have no more questions. I would like then to thank you all, and wish you a nice day, and of course very successful and profitable trading. And reminder that we are back tomorrow morning at the same time at 7:00 GMT or 10 o'clock local Cyprus time. Good luck.